Welcome everybody to Tradition Mortgage Podcast. I'm Mike Greenlay, your host, alongside Erik Hendrikson, your co-host, and our special guest this week will be Jacob Smith, broker with Sotheby's International Realty. And naturally, we're going to be talking about the housing market, a very interesting topic, especially these days. Erik, I know you obviously have been tracking that part of it. As a mortgage guy, that's the lifeblood right there. So, what have you seen recently that affects the mortgage market specifically?
Well, sure. Thanks, Mike. Glad to be here again. Really what we're seeing is we've probably had, never had a higher level of pre-approved applicants. So, that's the good news for us, right? You need to get those interested parties coming in, getting their applications in the system, getting them pre-approved. The challenge is they're just not getting homes. So you have people out there that have tried, 2, 3, 4, maybe even 5 times to get a home, and they have not been successful. And these are strong approved applicants. So again, our concern is, are these people going to get discouraged? Are they going to lose faith and then go back on the sidelines? Obviously, in the mortgage business, we need to close loans to generate our revenue to stay in business too. So certainly there are people out there that are having success, but really those conversion ratios are lower than they should be right now based on historical norms.
Jacob, welcome to the show. Appreciate you taking the time to join us. So this is a crazy housing market, to say the least. What have you seen from your perspective? Because it just seems otherworldly right now.
Thanks for having me here, guys. I've been in the business just over 20 years now, and this housing market is unlike any that I've seen. Kind of out of worldly right now is just, a couple of the things in the marketplace is the MLS system in Minnesota and across the nation for that matter recently made a change last year that allowed for what we call a coming soon status. And along with that coming soon status, it allows realtors to broadcast and make a property soon to be available. Mm-hmm. During that coming soon status, one thing that's interesting is no one can show it, not even the realtor that has the listing. And so what it has done is it's allowed us to build up demand in a property prior to even allowing showings to start. There was a property south of the river that I made a showing appointment on for Friday at 2 o'clock, was the first time slot available, was listed as coming soon on Monday. I made the appointment for Friday last night and got a notice this morning that it's sold. And so we have buyers out there that are buying properties sight unseen. Yeah. Just to get their foot in the door.
Was this new stipulation because of the pandemic, or was this going to happen anyway?
Happened anyways.
Yeah.
It was something about the clear cooperation agreement. Long story, we won't go into that today.
We want to talk about just pouring fuel onto the fire, just getting everybody salivating over a soon-to-be, coming property.
And that's why I asked the question, because naturally, in non-pandemic, it would be encouraging, but it's already crazy, and then you put crazy on top of crazy.
It's nuts, and really, it's great having Jacob here to give the perspective of these buyers and the thought process that's going on with people. From my side on the lending process, certainly it is concerning because of just these properties getting bid up, and one of the biggest challenges that I fear, is going to really become more of an issue is just, are these properties going to appraise out? If people are getting in these bidding wars and they're going $10, $20, $30, $40,000 over ask for a $300,000 or $400,000 property, you're talking maybe 10%. Are there going to be comps out there? Are appraisers going to be able to get these properties to appraise? And then, people are waiving appraisal contingencies and other things, just trying to get first in line. To me, it's just, obviously on the lending side, there's concerns there, but, maybe Jake, you could walk us through a little bit kind of those discussions that you have with the buyers and kind of the pros and cons.
Great comment. One of the questions that we've had from a lot of buyers recently is just that of what happens, Jake, if the property doesn't appraise. Ultimately, I want to win in multiple offers, but can I go through with the purchase? And we're finding lots of buyers that are even going to the extent of waiving their appraisal clause. And I'll let you touch on that, Eric. You know the details more intimately than I do of how that's done and how that works with Fannie and Freddie. But the conversation I've had with a lot of agents and a lot of buyers recently is what I call the 10 and 10 effect. And it seems like we take and we base our comparative market value or our appraised value on sold comps. Well, the sold comps that we're using are typically from November, December, and January are the most common ones that we see that fall into a segment. Well, since then, we've appreciated the market, in my mind, in most areas, this is generally speaking, 10%. And so that's first 10. And then there's the second 10 that's the craziness of the market. And so when they ask me what is it going to take to win, I usually push across the table to them, here are the comparable sales. And so I say 10 and 10. You have to put the 10 on top of these that's occurred since these happened, and then an additional 10 if you want to win. And so then they go, well, that feels crazy, and how do I justify that? And the only real justification that I can come up with is you're hoping to prepay in price for the next 10% of appreciation. We all know the risk involved with that, but that's the 10 and 10 effect.
You know, and that makes a lot of sense. And, you know, for us on the lending side, you know, it has forced us to have a little more frank conversations with our clients to say, okay, if you're going to put in an offer, we need to make sure that we have kind of plan B and plan C even, you know, lined up, saying, okay, if you do bid high and the appraisal comes in low, you know, what additional liquidity do you have to cover that gap? Because if you are, again, waiving the appraisal contingency, that means you can't back out of that transaction. You could be at risk of losing your earnest money or maybe even being sued for breach of contract, which may or may not be the case with this, you know, hot market, but, you know, certainly that earnest money is at risk. So I tell people, just be prepared to potentially pony up that difference if you need to. So we go through that exercise to, you know, okay, how much can you come up with, or how much can you access, because we want them to be prepared in case that's the action. And certainly for us too, you know, there's kind of reputational risk. I mean, if you do pre-approve a buyer and they go in and the appraisal comes in low or something happens, and, you know, you've issued a pre-approval letter and all of a sudden it doesn't close, they're like, did the mortgage company do something wrong in that case? And, you know, we don't want to be, you know, guiding people down a path that they go over a cliff. So it does put you in a little bit of an uncomfortable situation. And I think for us, the best we can do is just really communicate, have very honest discussions with the client. And I agree with you. You're prepaying for expected future appreciation. So what is your personal situation? Do you have a job where you could get transferred and need to sell, or do you have a business that has, you know, cyclical income that can go up and down, and you might be in a position where now you're forced to sell, and, you know, a year or two from now the market might be very different and all of a sudden it's down significantly and you're going to lose. So I think if people are very, you know, if they feel confident about their income and their financial security, and they're going to be in the property for 5 to 10 years on that horizon, then I guess, you know, it'll even out over time. But it's those people that unexpectedly would have to sell in the next couple of years where I do get concerned. And you know, nobody has a crystal ball, but you know, if anything does happen to this economy and the market cools off, those people that really went in aggressively on a bid may be in trouble.
So the word is inventory. I mean, that seems to be the key word lately, is inventory. You can read a lot of things, you can hear a lot of things, but Jacob, you experienced them being right in the middle of it. What's eating up the inventory? Other, you know, there's some that are more obvious, but there's also some underlying things that are eating up all the inventory. Can you kind of outline in your experience what you've seen from that perspective?
Yeah, great question. And that's one that even internally at the brokerage, we ask ourselves and our agents and our strategic partners, you know, weekly. We go, what are you feeling? What are you sensing? Where are we going to get more inventory? And we have a pinch on new construction inventory. So the national builders can't keep up, the local builders can't keep up, and there's a pinch on supply, labor, and cost on that end. And so we're not giving enough new units, number one. And then number two, we have a lot of people that have come, I smile and say the millennials, had the world all figured out prior to COVID. And this is a big generalization, but it makes me smile because it's kind of fun. If they were going to travel, they weren't going to own a house, they weren't going to do all this stuff, and they were smarter than their parents. And this COVID thing kind of turned everything on its side. And a lot of those buyers that weren't going to buy now have decided, I'm all in. And so we have a bit of a 10-year group of people that maybe had a little bit of a low home ownership rate that now we're trying to flood through the pipeline.
So you got low inventory, and then you got more buyers than what you thought you would have. So it's a fun supply and demand curve right now.
Yeah, one thing, Jake, that I can ask you too that I kind of feel is maybe part of the issue as it relates to the the new construction side of it. For those of us that have been in the business 20 plus years, living through the financial recession and the significant overbuilding that kind of led up to part of that, along with obviously the easy money on the mortgage lending side. But you saw new construction starts dip so low for multiple years, right? Well below the long-term average, right? And then, in your head, all of us kind of old, crusty people are like, that's going to bite us at some point in time. It's just got to bite us at some point in time. Just didn't know that we were going to all of a sudden have this explosive demand. And now we're seeing it, that lag in construction for multiple years because, the entitlement process for new developments and everything else. And I know we talked about this on earlier podcasts with Adam Nicholson with our tradition development. It's a multi-year process. It's not like, hey, let's get some lots in the ground and start building in 6 months. I mean, it's 2 to 3 years.
Yeah.
So it's kind of the chickens, unfortunately, have come home to roost a little bit with new construction. And again, I think that's just kind of adding, again, more fuel to the fire.
So what have you seen, and again, these are things that I've read, but what have you seen from the competition that you might be getting from what they're calling permanent capital competition, pension funds, groups, corporate groups that are buying homes and then renting them out? Are you seeing a lot of that? And you're also, because there's a lot of talk about it's not just single family buyers that are competing for this. You're getting corporate that are buying up a lot of full neighborhoods even.
Yeah. I haven't seen that much of that, but my business is primarily focused on interior areas and first ring suburbs, and so we don't deal with a lot of national tract building and expanding out, but I hear of it more than I see it. And I don't know if it's a bigger thing in Dallas, Texas, or a bigger thing in Lakeville, Minnesota.
Right.
But yeah, I definitely hear about that.
Yeah, I mean there are some areas in Minnesota where it's new construction and some developments that are rental, that are single family that you haven't typically seen. You maybe seen them more in retirement communities down south or vacation areas. Not so much in Minnesota, but I do think with the pandemic and other things move towards more low density rental versus being in a high rise condo or apartment. Downtown, people want a little more space. They kind of want their own yard. The stigma of being a renter when you're older is gone, and just to be able to unlock the liquidity of your house, sell that, rent, be able to use that money to live as you're older, or to give to your estate or your family. So there's that piece of it too. But really, again, there just isn't a lot of land, so I don't think you'll see a ton of that going on, and it is very expensive to acquire that land, and the runway's pretty long. So, the single family rental market is going to still be a pretty small segment. But on the lending side, the other piece that's challenging is people are sitting on incredibly low mortgage rates. And again, this was something when rates were first dipping. This was prior to the last presidential election going, all these refis, if you're sitting on a 3% or lower 15-year fixed rate mortgage, how much motivation are you having to move and lose that interest rate and go into another house? So again, it's just a lot of people that, maybe would have moved, stayed in their house or riding it out, maybe, funding, doing some home improvements to kind of convert that home into the new home they want without moving. And that's where I do think there's that mini renovation boom. Those of us that have friends that are in that space too, though, they're just as busy as anybody. People are converting existing homes into, again, what they would have wanted in a new house.
And Erik brought up a good point, because I know we've talked about this in the past, and that is people moving away from more high population, high density areas for the reason that, I'm going to work from home, or I'm not going to commute, or I'm not going to commute anymore, or whatnot. Have you found that there has been an easing in what would you consider more city center areas? Does that open up the possibility of more inventory in those areas for you, or is it just that getting gobbled up as well?
It all seems to be getting gobbled up. But what we are seeing is it's less crazy, right? Yeah. In the areas that people, it's the supply-demand curve. And so it's not everywhere in the marketplace. And I tell real estate agents to advise their clients all the time, and I advise mine. I go, all you need to do is get online and dig a little deeper, and you go, there are homes that are sitting there and have had market time, and maybe have gone through a couple different reductions, and you can take a shot at them. Everybody doesn't have to engage in the craziness of the multiple offers. So There's other spots to do it. What we are seeing, which we had kind of thought we were starting to move away from pre-pandemic, is just all the amenities. Mm-hmm. There's, you go, we used to say, and everybody's heard it 1,000 times, if you go, what do people think of swimming pools? And you go, well, half the people love them, half the people hate them. Don't expect to get $1 back out of the swimming pool when you sell your house. Well, now you go, swimming pool? Sign me up! And so you need 2 home offices, you need a gym, you need a swimming pool, you need a 4-car, you need it all. And so that stuff is hot.
Yeah. Here, I'm going to throw out the last question, and it probably feel more like a hand grenade than a question, but it's when you hear things like low inventory, competition, risk, you hear all that talk, and of course then the word crisis comes up. Is there a building here towards any kind of crisis in either one of your respective areas? And if yes, if no, let me know.
Okay, I guess I'll grab that hand.
Yes.
All right. Well,
handle it delicately, but
yeah, I think that the one big difference, and again, I've been in the mortgage lending industry since early '90s, so moving on towards 30 years, so I've kind of seen a little bit of everything. Just when I think I've seen everything, then something new comes in. But I would say this housing market is very different than the previous housing market boom of the mid-2000s, because that was fueled primarily by access to easy capital, easy credit. No income, no asset, low down payment, very minimal vetting of the individuals that were buying, a tremendous amount of speculative buying by inexperienced, first-time investors. That again, once that market tanked, they were just basically thinking they could just flip a property. They didn't have the liquidity to maintain the debt service on them. That was a recipe for disaster, and we all know what happened. This housing market, I would say that it's successful despite access to credit. People that we're seeing, the applications that are coming in, their credit scores, the debt to income ratios, the down payments, they're all very, very strong. So these people are legitimate buyers that have been vetted. Everything's been verified. So they're very, very solid. So what does that mean? If we do see a drop in real estate values, my opinion is, and these people, most of these are primary residences where people are living in them with their families. They have the ability to service debt. The value of a house is going to go up and down. It's a cloud of smoke on a given day. But if they're living there and they can afford to stay there, you're not going to see the delinquencies and the foreclosures that we had last time. So I think there is much stronger root system in place for the general population of mortgagors out there. So to me, that makes it very, very different. Now, again, if we do see a significant drop in real estate values, you are going to have those situations where people are not going to be able to get out from underneath their house, and you might see the short sales or the foreclosures creeping up again. But I think really around it all, it's the strength of the economy that keeps things going. And I would say that, we went through a really tough time at the beginning of the pandemic, and we're ramping up now. And as the economy's reopened, everybody is talking about a period of time where we're going to see strength. So I do think the next 12 to 24 months will be solid. But after that, if there is more of a traditional recession or things happen, to me, that's where it might get a little bit murky. But I would say right now, on the mortgage side at least, it feels, very, very strong so far.
I'm excited on the one of, I think we have a long run ahead of us. There's some stuff out of Forbes and Wall Street Journal that's, referenced that, this could be the beginning stages of a nice 10-year appreciation run in real estate. And, a large part of it is prices are going up, but interest rates have been historically low. And that's a term we overuse, but with the prices going up, some of the payment factors that people have locked into, house for house, can be equal to the same payment factor they had in the early 2000s with a similar down payment. And so the homes, although on paper when we say $500,000 or $1 million, we can swallow kind of hard and you go, that feels like a big number, they're really quite affordable on a payment factor against income basis. And so I feel pretty confident in what we have long term. Selfishly, I would rather see 3 to 7% appreciation versus 10 plus. But we'll take it as it comes, and it's great right now.
Yeah, I guess you just maybe one thing to lob back at you, Jacob, just to get your opinion on it. Like, what could possibly help us lead to more inventory, some factors that you would see in the next 12 months? To me, it seems like everything runs in streaks, right? Once things start going in one direction, it accelerates that way. And right now, it seems like the lack of demand is fueled like, just this, everybody's panicking and trying to get properties, and just makes it more and more difficult. But, do you really see anything in the next 12 months for people that are listening that are thinking about maybe buying a house in the next 12 months going, do I wait? Do I jump in now? Do you really see anything that would lead you to think there'd be a material change in the access to housing inventory in the next 12 months? I think I know the answer, but I'm going to ask you anyways.
No, I mean, I keep hoping, and one of the things that I'm hoping for, as we all are, is that our case counts and our numbers with all of this COVID stuff starts to go down, and the vaccines start to prove that they're working, and things free up in our personal lives, and we can travel and do more fun things. And I think as that happens, which inevitably it will, whether it's 6 months, 12 months, whenever it is, and I think some of the people will find other things to do and will go, you know what, I'm going to pass for now in the housing market. And that will help to slow down the pace a little bit. And so, but there's no other inventory solution other than fewer buyers entering the marketplace.
Yeah, it's just kind of interesting because it's counterintuitive a little bit, but you get buyers to pull back out of the market, and then you have would-be sellers that maybe didn't feel super motivated to sell, that all of a sudden are like, gosh, things aren't moving as fast, maybe I should get my house on the market now and take advantage of this. And then it further helps create access and tamp down that panic mode that's going on as well too. So I think you're right, and there are a lot of people I've talked to that are maybe an older generation, and they were planning on selling, they were going to rent, they were going to travel the world, do whatever. Now they're like, I'm not going to sell my house because this is my castle, I'm living and I have nowhere to go. And you know, the world's a safer place and you can travel. All of a sudden now that home comes up for sale and boom, there's another spot for a family.
It's a great point.
All right, gentlemen. I know that we'll be revisiting some of this stuff down the road, just because it is pretty compelling and it's something that's always moving. Jacob, appreciate you coming in and joining us. A lot of great information there. Erik, thank you once again, and I know we'll do this again.
All right, thanks, Mike.
Thanks, Mike.
Appreciate
Thanks, guys.
it. Yeah, bye.